Worldwide markets this week. Google IPO'd 21 years ago via a strange Dutch auction. We'll go into the details, but it has been an excellent investment. Results, Standard Bank and MTN. Sasol, everyone's asking, am I buying? And Buffett Buys UnitedHealth. Should you? I'm Simon Brown. This is Worldwide Markets, episode 644 for 20 August, recorded late Tuesday morning. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shift, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shift, powered by Standard Bank. Thanks to Shift, thanks to Standard Bank for sponsoring the show. So let's kick off with the news. I think it's the 18F. Everyone has to put out all the funds and the like in the US. What have they been buying and selling over the previous quarter? That came out Friday morning ahead of the US market open. And one of the pieces of news was that Warren Buffett had been buying UnitedHealth. Now, this got everybody very, very excited, particularly because UnitedHealth has been beaten down. It was a $600 stock late last year, and it is now a $308 stock, although it's been below $250. They have all sorts of investigations and federal challenges happening right now, and federal investigations, rather, that are happening right now. In fairness to the stock, it's only back at where it was in November 2023, so it's given up, let's say, almost 5 years of returns. But what happens is that Berkshire Hathaway, and to be clear, it's Berkshire Hathaway, it might not be Warren Buffett, it might be Greg Abel, is out there, Greg being the CEO designate, is out there, and everyone's like, oh, this is great, he's bought this stock, should I jump in as well? My first point is, I don't like healthcare. I worry about that regulatory concern. Now, Donald Trump was all full of talk around how he was going to push back on drug prices and the like. UnitedHealth are not involved in drug in any way, certainly, well, they in terms of administrating. But the question is, he hasn't, are future administrations? Yeah, healthcare the world over has risen well ahead of inflation. Pricing in healthcare has got extreme. Part of that is because we live longer, they find new ways to treat us and heal us, and that all has the compounding impact of higher costs, longevity. Now, we like the longevity, the costs are a challenge. So this is not a sector I am particularly thrilled with. The stock in of itself, on a current PE of around, a forward PE of around 19, the standard deviation is 18. So it's offering some value. It's priced to book at 2.9. The mean over the last decade has been 4.9. The stock is cheap on many metrics. The point is it goes back to Warren Buffett buys. That's great. Is that reason enough for you to jump in and say, I also want? Maybe it's reason enough for you to start looking. That certainly is possibly true. If we look at the analysts, there's 2 sells, 5 holds, 12 buys, and 6 strong buys. The low target's 198. The average is 330. The stock's 308 at the moment, and the high is 626. That high might not have updated recently. But as I say, the point is, can you use this as, well, let's use this to go and have a look. That is perhaps worthwhile. But to blindly follow and say, well, Buffett is buying, so should I. Because in December, I did a podcast. He bought a company called Pool Corporation. At that point, it was trading at around 390. It's now trading at around 320. He has bought some more. And we don't know what price he paid for it. He could have bought it earlier in the quarter. Who knows? The point being is, don't just because Buffett buys say, well, let me follow him. If you want to follow him, then buy the Berkshire Hathaway share. Absolutely. Nice and easy. Otherwise, can it be a starting point? Sure. Is there value in UnitedHealth? Probably there is. It might be some time. There's going to be some court cases. These are going to certainly drag on, and it could get messy in that point. As I say, I don't like the sector. There is an exception. I hold Johnson & Johnson. Are they healthcare? They are, but not in the pointy end of prescription drugs and the like. The other side of the point is things such as services into healthcare industry. Is it Stryker who sells hospital beds and equipment like that? There are REITs out there in the US that focus on hospital groups, hospital buildings. I like that. I think that healthcare in of itself is a risky space. There is also a couple of healthcare ETFs on our local market. You can, of course, go and have a look at those. I think there are two in the offshore space. There's certainly a Signia, and I think we also have a couple there. The Satrix Healthcare Innovation. I have to say, I thought there was a Signia as well. So the Satrix is STX HLT is theirs. And let's go and see if there is perhaps a Signia at the same time. I'm not seeing a Signia Health, which is maybe it's moved into the active side. A couple of folks have been saying, when are we going to bring active? Yeah, I think it's on their active side. So there is a Signia one, but active. A couple of folks are saying, when are we bringing active ETFs into the database? By the time you listen to this podcast next week, we will have the active ETFs. So the short answer is they are definitely coming. We have a Standard Bank Power Hour on Tuesday, the 26th, looking at listed property overview and outlook. Keelan Ndlovu will be presenting it. He's an absolute boffin in this space. The sector peaked in 2017, 2018 with stock prices that were well ahead of net asset value, which is fundamentally wrong. You should be buying them at discounts. Back then, your yields were mid to low single digit. We still got the stocks at discounts to net asset value. We've got yields in the high single digit, in some cases low to mid double digit as well. So certainly still offering value. Keelan will have a look at which he thinks are offering the best value. Tuesday, 26 August, you can attend the webcast live, or you can attend in Rosebank at the Standard Bank head office, Rosebank in Johannesburg. JustOneLap.com/events for more information and booking. So as I record this on the 19th of August, it is the 24th anniversary of, my bad, is the 21st anniversary of the Google IPO. They IPO'd in 2004. The money raised was 1.6 billion. I want to quickly go and check what that market cap is now, because I can tell you it is a long way beyond 1.6 billion, of course, and of course it is dollars. It won't be ZAR. But they did it in a really interesting way. And that's what was fascinating, and why when it popped up on my screen, I thought to myself, this actually might be worth a gander in that regard. Market cap now is, let's call it 2.5 billion. In other words, you paid I think it was 14 a share. 1.66 billion at listing. It was $85. You've done about 8,000 odd percent. You've done about 8,000% excluding dividends. That's a spectacular number. But what they did for their IPO, so the traditional way of doing an initial public offering, is that you go to market and you say, we're going to sell the shares. You might have a bit of a range. There might be a price. You do road shows, and then the brokers say, yeah, we like that price. We'll buy for so much value. Google said, no, we're going to do a Dutch auction. And they ran it over, if I recall, it was maybe a week or so. And the way a Dutch auction works is that everyone puts in their bid for what they would like to pay for the shares. What is their fixed price? And that, in essence, is Google allowing all of the shareholders to say, yeah, what are you prepared to pay for the shares? And then the highest price that covers all the shares, because you said, I want 1,000 shares at $80. I'm out of luck because the price was $85. But I wanted 1,000 shares at $85. The highest price that covered all of the shares that were up for issue in that IPO happened to be $85. Well, then that is the price at which the IPO happens. The reason why they did it was because it let individual investors come in on an equal footing compared to the institutions. And Google at the time felt that, sure, institutions are going to be our investors, but our bread and butter, our users are those people on Google.com, and they are the individual investors. And I think they were right. And it's been a spectacular listing, an investment. It's now obviously called Alphabet. And what we see now is that it has been a great return. Fun fact, for a long time, it was neck and neck with Domino's Pizza, who listed the same week. And after about 10 or 15 years, their returns were pretty much the same. Google has pulled ahead in recent times. Domino's has sort of lost that battle. But pizza versus search, well, anyway. I have said before, I think that Google is offering, or Alphabet is offering value. Judge Mehta, in their one court case, is expected to announce the punishment for Google that will happen in August. So in other words, that clock is ticking. We're down to 11 days. And I suspect whatever the punishment is, we know that Google's going to appeal. So they were found guilty. They don't get to appeal at that point. They get to appeal when the punishment is determined, and they will appeal. This will go on for years. Interesting fact, most of this trial happened in 2023. There was practically no mention of AI. And of course, now it's all about AI. Thing is, when that judgment happens, if it's a nasty judgment, Alphabet's going to fall, and I'm going to be a buyer. Absolutely, I am. I think that there is some value there in Google. I think it's looking attractive. Let's look at some results. MTN came out with results, and they were, how do we say it politely in the classics? Well, I mean, to be clear, they knocked it out the park, right? In terms of returns, etc., hundreds and hundreds of percent. But that's because the last set of 6 months numbers had all of those currency collapses out of Ghana, their third largest market, and Nigeria, their largest market. South Africa is the middle market. So they had that massive base effect. The market didn't like the result, it didn't respond well to the results. The stock was down some 8%, but they've still got challenges around their deal in Afghanistan, their deal in Iran, and I think the market is spooked about that. Also, wholesale executive changes in the South African operations. But the stock has rallied. In the last year, 1 year return is up 77%. Year to date's up 71%. We throw dividends, it's 83% total return over the last year. The current PE is a misnomer. If we look to the forward PE of around 13.5, we've got a mean of around 25. So certainly the market says, yeah, there could be some opportunity here. I just don't like telcos. And MTN in particular. And here's if I look at the recommendations, we've got 6 buys, we've got 2 sells and 2 strong sells. Average price on the range is 164, MTN's 157, the low is 73, the high is 220. Man, that is a giant range. You could drive a truck through it, make no mistake. But I don't like the sector. Ultimately, data and the like is just a utility. And my question is, to me, so I've got an eSIM in my phone. I happen to use the MTN as my primary account, but I've got an eSIM for extra data. I'm using, I think it's Melon Mobile is who I'm using, and they offer really good rates and eSIM and off to the races. So I don't have to go and enter contracts and stuff with MTN. And then, of course, there's CapEx. Huge amounts on CapEx spend. 6G will be coming out. And yes, they've got the tower business off, mostly handed off, but they still have responsibilities around CapEx. That cost doesn't disappear. It might disappear directly out of their expenses, but it is still somewhere there. That said, the stock has run incredibly hard. I think we could see a pullback maybe to the 145s or so, and then we'll take it from there. The other, so I am not buying, but one I am having a very, very hard look at is Standard Bank. They had results out last week. Return on equity came in at 19.1%. Absolutely massive number there. Stock trading at all-time highs. The trick is, I don't think this is a particularly cheap stock. Now, the analysts, we've got 4 holds and 3 buys. The low price is 247. Standard Bank closed on Monday. Low's 245. Standard Bank closed 247.55. The average is 270. Let's call it. The high is 304. So the analysts are saying there is value here. And Standard Bank is now about 40% into the rest of the continent. They're doing very well with that. They've got Sim Shabalala, and the CFO will be stepping down at the end of 26, or is it into 27? They will be able to replace internally. They've got a very strong bench. They don't have the challenges, certainly, that ABSA has. What they've also got is just a brand, a monolith of a brand. And this is a stock that, if you're building a boring portfolio, you would certainly be looking to put Standard Bank in. Forward PE is 8. The mean is 10.1, so it's cheap on that metric. The dividend yield is 6.6. That is a nice chunky dividend yield. Price to book is where I maybe scratch my head a little bit. Price to book is, I think, the best way to value banks. Their price to book is 1.5. That is also the 10-year mean. Sorry, 1.4. The 10-year mean is also 1.4. Standard deviation is 1.1. Standard deviation down. So this is, is it likely that we're going to see Standard Bank get to a price to book of 2? They've been there. They were there in 2018, trading at around 2.1, 2.2, which at this point looks at some 50% upside from it. I just think, and you know what, it's probably one of my biggest failings as an investor. I like it, and I think I bet I could get it cheaper. The problem is that, can I really? And the thing is that we have a break higher already. That 240 level, which it broke last week on the results, was an important number. I think we might get back to 240. I think we certainly might see a little bit more downside. I will then be looking to pick up some Standard Banks. I'm not going full allocation. I think at a price to book of 1.4, it's a little bit rich, but let's see. The other banks, of course, we've got First Rand. They trade at about a 1.8 or 2. They've always been the premium. And then Nedbank and Absa. And the thing with Nedbank and Absa is they are cheap. But you know what they've been? I do Stockwatch, right? Twice a week I host Stockwatch. Viewers ask questions about different stocks. And the one, a number of my guests have for the last 15 years that I've been hosting Stockwatch on and off will say Absa is cheap. It is still cheap. Are we finally going to see a turnaround? Absa's price to book is about 0.9. Can they get to that 1.5, which Standard Bank is at? Can they get that uplift? You know what? History says no. Now, things change. Absolutely they do. Maybe there is some hope there. We'll find out in time. But I certainly am not holding my breath for that. I like Standard Bank. I think it's a quality business. And I suppose I should disclaim, they of course sponsor the Power Hours. They're also sponsoring this video, but they have no idea that I am saying nice things about them. Everyone was asking me, I spoke about Sasol last week. And what I didn't do was tell you if I'm buying or not. I told you at the time that I'm not a massive fan of Sasol. And if we have a look at oil, which is certainly an important component in Sasol's life, they're sitting, oil is looking weak again and looking to head back to maybe in time that sub 60. We'll see. But Sasol itself, what's weird? When Sasol was sort of falling from 200 to 100, everyone and their pony was saying, this is a great stock, we must buy it. And then it gets to 50 and everyone hates it. Now it's bounced off 50 and got to 100 and everyone hates it. There are challenges with Sasol. Part of it is chemicals, part of it is business operations. That set of results that came out, as I said last week, we can see most definitely a stronger second half compared to the first half. I do think they've got most of their operational challenges out of their way for now. And I'm watching that sort of support, which sits at around about $100. And if that can start to break, and it looks like it is, I think we can see a run to 140. So this is not a long-term buy and hold. For me, this is a buy it, grab it. When you've made some money, head for the hills. That is absolutely how I plan to be playing Sasol. I am not in Sasol for the long term. Not my style in the least. Worldwide markets, powered by Standard Bank Global Markets, Retail, and Shift. The global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. Shift, powered by Standard Bank. That's it for this week. Remember the Power Hour on Tuesday, and then September's Power Hour, which is on the 18th, if memory serves, is Mishima Gama. And then there's only 3 left, October, November, and then we are in December. But we're going to leave it there for this week. My name is Simon. As always, look after yourself if you can. Look after somebody else as well. And we'll chat again next week. Cheers all.